Welcome everyone to my presentation on banking basics. My name is George Dillman and I'm the Consumer Outreach Specialist with the Pennsylvania Department of Banking and Securities. Our agency regulates those industries in the Commonwealth. If anyone ever has a question, a problem, an issue, as it relates to that, they can reach out to us. I'll have contact information towards the end of the presentation, but we regulate, related to what we're talking about today, banking. We don't regulate all banks, credit unions, and savings banks in the Commonwealth, but we regulate over 200 state-chartered banks, credit unions, and savings banks in the Commonwealth. If somebody does have a question, has an issue, has a complaint about their bank, they can reach out to us, and if it's a bank that we do not regulate, we'll make sure to point you in the right direction. But this is what we're talking about today, banking basics, and in some respects how we can help people if they do have a problem, have an issue with that. So this is what we're going to be covering today. Why use a bank, types of institutions and accounts, opening an account, tips, overdrafts and options, keeping yourself safe, and regulators, insurance, and assistance. A little bit of history with banking. Banking has been around in some way, shape, or form almost as long as civilization has been around. I think it really started taking form, taking shape back in the ancient Greece, ancient Rome. Of course, the Greeks and the Romans worshipped multiple gods. They had temples to these gods. They had priests who oversaw these temples, and most importantly, because they had a lot of wealth, they had guards guarding these temples. Very safe place for somebody to keep their fortune, if you will, their wealth. So the wealthy started storing their wealth in these temples, probably for a fee, of course, and storing it there was a safe place to keep their money, their gold, their silver, whatever. And at some point along the way, they realized they could. Priests realized they could loan some of this money out and then collect it back with interest, and kind of how it started taking shape. And of course, we coming to today where we have banks today where we loan money, we deposit money, pay interest on deposited money, charge money for loans that are given out, so on and so forth. So, but yeah, they've been around almost as long as civilization has been around itself. So why use a financial institution? Again, bank, credit union, savings bank. First is security. People used to carry around their money in cash, coin. Some people even today still do that. I came from an agency where we worked with the public, and a number of people walking into our facilities that still carried cash with them. Didn't believe in banks. Maybe in some cases they couldn't have. Or credit unions or financial institutions, or they weren't allowed to have or they couldn't have an account there. So they're carrying around cash, paying everything in cash. Every so often, one of these people would either lose or have that money stolen. And there was virtually nothing they can do unless they caught it on tape, somebody taking the money and they saw the person. So, security. Cash can be lost, stolen, destroyed, and cash isn't insured. I think as most of us know, our cash, our money, is insured at most banks. Like to emphasize that most banks, either FDIC insured with banks and savings banks, or NCUA insured with credit unions, up to $250,000. But not all banks. So that's something to take into consideration. Maybe first, if I'm already using a financial institution, maybe I should check to make sure that my financial institution is insuring my money. But in most cases, the money is insured. If it is lost or stolen, it gets replaced, up to $250,000. Convenience, right? We can access our money from just about anywhere, especially in this new age with technology, transferring funds back and forth, paying bills online. Very convenient, transferring back and forth, and or paying with check as opposed to cash. Again, if I'm using cash, some of these people that I used to work with at this previous agency would have to go here, they'd have to go there to pay this bill, to pay that bill. as opposed to just, again, writing out a check and sending it or doing some type of an electronic transfer. And now we have the saving and investing option. A lot of financial institutions are getting into, traditionally they would do what we refer to as savings, right? A lot of them now are starting to get into investing as well. Likewise, large investment companies, at least maybe not just large investment companies, but investment companies getting into basic financial savings as well as investment as well. So doing everything, kind of like a catch-all, one-stop shop, if you will, for customers. So we'll talk more about that as we go along. So we're looking at the types of institutions. Basically, we have banks, credit unions, savings banks. There are differences. There are a lot of similarities. There are some differences between the two. Traditionally, and I say traditionally because I think more and more we're starting to see a graying of these areas with the different institutions. But traditionally, you had pros and cons to both. Banks, generally larger, a lot more, a larger array of services offered, branch locations, ATM, and just the services that they have available. Generally, a larger array than maybe what you would find at the credit union, at your credit unions and savings banks. Deal heavily with commercial customers as well as the public. Whereas savings banks, credit unions, probably dealing more with the public, personal loans, things like that. Not as offering as many services, but on the flip side, especially like with credit unions, where a lot of the credit unions are member-owned, very customer service oriented. You're not just a face and a number, or a name and a number. You're personal attention, if you will. Very customer service oriented because they are members. Generally traditionally better rates of return on your deposits, and better rates, in interest that's being paid. They're looking out for for their members. We're all members of this credit union, so to speak. We're looking out for our members, as opposed to banks who traditionally have to answer to stockholders, and they have to get the most bang for the buck. Generally higher rates with as far as loans, lower rates as far as interest that's accrued. I say traditionally because I think we're starting to see a graying of those lines between the three entities. For example, I had an account with a large regional bank and actually a large local credit union in the area, and I was thinking about taking everything, switching it from the large regional bank to the credit union. I actually ended up doing it the other way. Why? Customer service, or I should say lack of, even though traditionally with credit unions, in this case, I'm not saying all credit unions are like this or savings bank, but in this particular case, I was getting little to no customer service with the credit union I belonged to, but much better customer service with that large regional bank. And I thought back and I thought, boy, over the last 5 to 10 years, the customer service has really gone up with my bank, and they're probably all doing that now. Competition's getting competitive, maybe upping that customer service, being more customer service oriented, offering competitive rates, if you will, on loans and savings. So I think we're starting to see a graying of the area, and if we're looking to choose a financial institution or a different financial institution, because it never hurts to shop around. Never hurts to shop around. It might be looking at the individual institution as opposed to what type of institution it is. It could still matter. There could still be those differences, but I think we're starting to see a graying of those areas. Moving on, we're now looking, over the last 5, 10 years or so, online banking and digital versus neo. Two types of online banking. Digital banks are essentially extensions of the traditional brick and mortar banks. Brick and mortar banks that are now offering online services, and I think probably most, if not all of them, I would think all of them in some way, shape, or form, but most offering online services now. Neobanks are those banks that are strictly online. No brick and mortar locations to go. It's all online. And there's pros and cons to both. Digital banks, because a lot of it because of they still have the brick and mortar locations. Digital banks, because of the banks that they're attached to, the brick and mortar banks they're attached to, can offer probably more, if not a lot more, services than the online banks. The trade-off there is the services that the online banks, the neobanks, do offer, because they don't have those brick and mortar locations to pay rent on, heat, and so on and so forth. They can generally offer better rates, if not much better rates, on deposits that you put into your accounts. So there's the trade-off there. Some people are taking advantage of both. I've talked to some people who will have an account with a digital bank and a neobank, and they have just enough in that digital bank account to cover the bills that they need to pay, emergencies they need to cover, but the extra funds they're putting into their online bank account, their neobank, to collect those better rates of interest on their cash that they have. That's still readily available. And that's the whole idea, that money is still readily available. Along with that, we have those money transfer services, apps in some cases we can download to our computing device that we can transfer funds from our account to somebody else's account. Got to be careful, but generally fairly safe. Everything that's being sent back and forth is encrypted, should be fairly safe. Nice and convenient way. I've heard stories of people going out to a restaurant, maybe 5 people going out to a restaurant, and rather than dividing up who's going to pay what, one person pays with a credit card, and everybody else at the table, even while they're at the table, whatever they owe, they transfer from their account to that person's account to pay for it with one of those, and I'm talking about like a Venmo, a Zelle, even PayPal, which is, and other services like that, these money transfer services. So we have that as well to look at and to use. And that brings us to online, not only online banking, but cybersecurity. As we're going more digital, we're doing more online, paying bills online, transferring funds back and forth online. We have to be aware of those cyber criminals out there looking to take advantage of us. Okay? We need to follow those rules of thumb for cybersecurity, like good, strong passwords on all of our accounts. Experts say that we should be using at least 8 to 10 characters. We should be using capital letters, lowercase letters, numbers, even non-alphanumeric characters like pound signs and exclamation points. We don't want to use words or phrases that are easily guessed. I do a presentation on cybersecurity where I talk about my cat, Princess Fluffy, and how much I love my cat, Princess Fluffy. And I'm always taking photos of her and posting them to social media so all my 6,000 friends can see her. And I say that friends with the finger quotes, because how many of us really have that many friends? How many of these so-called friends are cyber criminals looking to steal information from us? Experts say that one of the places we tend to share more personal sensitive information than anywhere else is through social media. Guess who knows this? Our friendly cyber criminals. So they're prowling these sites looking for information they can steal. So one of my friends knows about Princess Fluffy. The last thing I want to use as my password is Princess Fluffy 1. So we want to use things that would be very difficult to guess. We want to use a different password for every site that we go on to. Because if our password does get figured out for one site, no brainer there, right? Now they have our password for every site that we go to because we're using the same password. We want to change our passwords on a regular basis. The longer these passwords hang out there, the easier it gets. I'm not the expert on this, but the easier it gets for them to crack the code, if you will. So we need to change our passwords on a regular basis. We got to be wary about people contacting us, apparently from trusted sources, who turn out not to be a trusted source. The example I use is I get contacted by my local bank. They send me an email. I get email alerts, text messages, emails from my local bank, and I get an email from my local bank, Susie at my local bank in customer service. Hello, Mr. Dillman, this is Susie at your local bank. The bank is updating its records, and we're reaching out to all of our customers, asking them to confirm all their information for us. If you can hit the link below, that'll take you to another page, and on that page, you can do that. You can confirm all your information. So I'm going to help my bank out, and I hit the link, and I go to the page, and I confirm my name, my address, my telephone number, my social security number, my date of birth, my bank account numbers. How do I really know that email came from Sue? It said it came from Sue. I get emails all the time from my local bank. The bank's name, the logo, everything is there. In this day and age, it's very easy to copy and paste and Photoshop things and make it look like it came from a trusted source. And in this scenario, not only did I give somebody all my personal information, my bank account information to access my accounts, but also, without knowing it, by hitting that link, I could be downloading some malicious software to my computer that might allow that scammer to go to my computer anytime they want to steal information. So we got to be careful. Got to be careful. I've heard some stories about people transferring with the money transfer apps. You transfer my account to somebody else's account, and they get reached out supposedly by a trusted source who needs money for whatever. And once that bank money is transferred, it could be gone. And it might not be covered by your bank. Some banks will actually cover it. If you realize somebody scammed you out of money, some banks will actually cover that loss for you. Some banks won't. So we got to be careful with that. All right, so we're looking at basic banking basics. Essentially we're looking at savings versus investments. On the banking end, the financial institution end, we're looking at savings. And then with investments, we're looking at investing. But now, I think I mentioned this earlier. A lot of your financial institutions are starting to offer investment options. A lot of your big box investment company or your investment companies are offering basic banking services as well. One thing we have to decide, and I'm talking about savings. We're talking about checking accounts, savings accounts, money market accounts, holiday funds, vacation clubs, certificates of deposit, combining them all into what I'll call savings. Savings are insured. Investments are not insured. Even if we're going through the same institution, that's why I have that asterisk there. And the little word at the bottom, the little verbiage there at the bottom says not protected, not insured. With my large regional bank, I have savings and I have investments. However, two different divisions, and my financial professional that I'm working with at my bank went over this several times, reminding me 5, 6, 7, 8 times. Mr. Dillman, just so you know, this money is not insured. It's a different division. And I said, I know. I talk about this all the time. I know that's even with the same. So we have to remember that if I do decide, and it can be very convenient. Again, they're offering competitive services, just like the investment company. Investment companies offering competitive services along with, in some cases, along with the banks. But we have to remember that even if it's the same institution, savings is insured. If we go to their investment, it's a different division. Investment, anything that we invest is not insured. So that's something to keep in mind. Also, and along those lines, savings insured, investments aren't insured. Gee, George, why should I even invest? Well, there's an old saying: you save to keep pace with inflation. You invest to stay ahead of inflation. Now, going back to that first one, by the way, a little asterisk there, because things that I've read, seen that I've experienced with my own accounts, things that I've read, we're not even sure if the interest rates with our savings is even keeping pace with inflation. However, we do need those savings. We do need to have those savings. We need to have those accounts. First of all, to cover expenses, to pay bills, right? We need a place to keep our money, so when every month we need to pay bills, we need to cover things, we have that money readily available. We need to have those in those savings accounts. But also to cover those emergencies that come up. Not if they come up, when they come up. We need to have an emergency fund within our savings. So, readily available money that we can have access to very quickly. Experts say that we should have worth of expenses in an emergency fund. Some experts say even more. So we do need to have those savings funds for, to pay those those short-term needs, such as bills that we need to pay on a monthly basis, but also for that, to fund those emergency funds, to cover those emergencies when they come up. Now, again, save to keep pace, we invest to stay ahead of inflation. We have additional, say I have 6 months worth of expenses and I have a little bit padded there, I have a little bit extra to cover those monthly bills. Gee, now maybe I should take some of that extra cash that I have and maybe start investing it. And maybe I can do that with the same institution. My bank or my credit union has an investing arm. Maybe I should invest some of that to accrue, because that's where we're going to get ahead, as far as additional funds, the interest, the compound interest that really starts to take off after a while that we want to accrue. So saving and investing. All right, time to open a new account. What are your needs? What are the fees and features? Needs are going to differ from person to person. My needs are very basic myself, but if there's something that I already have an institution, but if I'm not satisfied, should I start looking around? Maybe going to fees and features. Maybe I do check around, I shop around, just like anything else. I shop around for another financial institution, and I find a place that has better features and maybe most importantly fees. Maybe I'm paying fairly high fees and a lot of fees for different things with the institution that I'm with. They are going to vary from financial institution to financial institution. So something to check out. One of the features, when I opened my first account right out of high school, one of the features, the bank that I opened my account with at that time had an interest-bearing checking account, which got me just about the same amount of interest as I would have gotten with a savings account. And that was one of the reasons I chose that institution. Oh, wait, I don't have to have two accounts. I'll just put everything into the checking account. I'm getting basically the same interest, which was a lot better back in those days. But I'm getting basically the same amount of interest, and I can keep everything, I can have everything put into one account and just pay my bills. I don't have to worry about transferring funds from my savings to my checking to pay a bill and so on and so forth. So, what are your needs? What are your fees? Do I need to have a branch local? Do I want to have a brick and mortar branch to go into? Me personally, I do. I have my large regional bank has a branch right down the road from where I live that I can go into anytime I want. Now, I might go in there 2 or 3 times a year, but as needed, I know it's there. It's like my security blanket. Whenever I need, I can go into that branch location. Or now to meet with my financial person, I have a location that I can go to. So is that important for me? In fact, that is important for me. And if they were to close that branch, and the closest branch was X number of miles away, would I start now considering other options? Of course, taking everything into consideration. So your needs, fees, and features. What are the identification requirements? What about all those disclosures? This can be and is very important. We'll have people contact us and complain. My bank isn't doing this, or my credit union is doing that, and I don't like it, and I want to file a complaint. As far as I know, financial institutions should have disclosures available for customers and potential customers. Basically tells you everything, how that bank operates, what they do, how they do it, fees that are charged, what fees are charged, how transactions are done. So they should give you everything in those disclosures. If you ever have a question or an issue, you should be able to look at that disclosure to confirm why they're doing. I don't like it. Gee, I don't like that the bank is doing this. I want to complain. Well, you can complain. There's not a lot you can do about it, except if you're not happy with that bank that you're with or that credit union you're with, you can certainly switch. I did that. Again, had 2 accounts, large regional bank, credit union, getting little to no customer service at that credit union, and everything got switched. I don't care what the rates are, if there was better rates. My thought was if I needed somebody to talk to correct something, I had somebody with that large reach. In fact, they were reaching out to me on a regular basis. So, but the disclosures, review those disclosures with your current institution, or if you're looking around, get those disclosures and compare apples to apples, oranges to oranges. All right, ask your institution about fund availability. Now, before we get into fund availability, let's talk a little bit about what's coming in versus what's going out. I do a presentation on spending plans, AKA budgeting. And we should all, if we're looking to save, we're looking to invest, we should all be working on some type of a basic budget. Basically tracking what's coming in versus what's going out. A lot of people out there are living paycheck to paycheck. And I'm not just talking about people making $12 an hour. I read an article where something like more than 40% of people who make six figures a year, $100,000 a year or more than 40% of them live paycheck to paycheck. So it's not just people making minimum wage that are doing this. People making six figures a year that are living paycheck to paycheck. Basically, everything that's coming in is going out. My thought is a lot of these issues that we can have, like fund availability that we'll talk about shortly, how could that be solved? Making sure we have more money coming into our accounts than what's going out. And if we don't, how can we straighten that out? How can we fix that? Let's put together a budget. Let's do an expense tracker and see what is going out. Can we cut back on what's going out? Can we swap out to get, I love swapping out, by the way. The example we use a lot with the spending plans is the coffees a lot of us like to have out. Every time I pass by my fancy coffee shop down the road from me, they have a takeout window. There's always a line going around that. A lot of people going in and getting their fancy coffee. And say I'm going in and spending $4 a day, maybe even more, depending on what kind of a coffee I'm getting. But say I'm spending $4 a day, and I add that up over the course of a month, and I realize, oh my God, I'm spending $120 a month on that fancy coffee again. Maybe that's something I could cut back on, or maybe if I go to the Quickie Mart, to the convenience store, maybe I could get that same coffee at a cheaper price. Maybe because of the size of the cups. One of those fancy coffee shops, their grande is, that's the grande. It's comparable to somebody else's small. So maybe I could get, a comparable size at like half the price. I still get my coffee every day, but I've now just saved myself $60 a month by swapping out. I'm still getting that coffee, but swapping in. So what can we do to free up those funds? That said, a lot of people that are, paycheck to paycheck, what's coming in is what's going out. So they would have to be concerned about fund availability. Fund availability, I have my paycheck deposited directly into my account. Depending on the institution, when are those funds? Those funds could be available in some cases maybe immediately. Maybe I have to wait 5 business days before those funds are available. If I'm counting on paying some bills with those funds and I have to wait 5 business days, that could be important. So when are those funds available? Are at least half of them available? So I think some institutions, maybe more, might be doing like half now and then in that 5-day period or however many days, because it will vary from institution to institution than the rest of those funds. But that could be important for somebody. When are those funds available? Are deposits insured? Like I said, I think most financial institutions, our deposits are insured up to $250,000, but not all of them are. So that could be important. My money gets lost. I'm not going to be able to recover it in some cases. And what fees might be charged? How many fees are they charging? How high are those fees that they're charging? Could I shop around and find another institution that charges less fees and lower fees? Ask your bank how they process transactions. Again, for somebody who's living, paycheck to paycheck, this could be important. How do they process transactions? Largest to smallest or order of receipt? Say I have 5 bills that I need to pay. I need to do 5 transactions, 5 bills I need to pay, and the first 4 are for $100. I have $400 in my checking account. The first 4 are for $400. The 5th one is for $400 total. The first 4 are $100 each, for a total of $400. The last one is for $400 total. So I decided to pay those first 4 first, thinking they're going to get processed first. On that last one, I'm going to pay that last one last, and then that's it. I'm going to be over. I'm going to have an overdraft on my account, and I'm going to get whacked a fee for that. Anywhere from $20 to $40, something like that is the average. But I'm going to get whacked that one time. But maybe I don't know that my institution doesn't process that way. When they get those transactions, and that even though they get those first four first, they get that fifth one, and lo and behold, this is the largest one. We're going to process this one first. That one gets processed. The $400 gets covered, and then I get whacked on the last four, on the other four, because there's no funds there, and I could get hit with an overdraft charge on each one of those funds. So, again, how do they process transactions? As I've said before, and I'm going to say it at least once or twice more, can be easily solved if we're making sure we have more coming into our accounts than what's going out. That we don't have to worry about when funds are available, when they process transactions. We have enough in there to cover them. All right, what is an overdraft? An overdraft happens when you have more money coming out of your account than is available. Overdrafts can be expensive, costing from like $20 to $45. I said go up to $45. Your institution. Oh, by the way, and I do have something on that up here. 2 articles for those those are here live, not watching the recorded version. I do have 2 articles on that. How a lot of banks, or I should say, financial institutions, are starting to do away with those overdraft fees. Now, one of the articles talks about how they're making it up by charging a fee elsewhere. So, but maybe eliminating, either lowering or eliminating overdraft fees. But at this point, we still have institutions still charging those fees. Your institution can charge you for each item that causes your account to be below $0. Again, I could get whacked for all those 4 that didn't get processed right away, and I could get whacked for all 4 of them. Some institutions charge additional fees until you make a deposit to cover the shortage. So I could be charged additional fees until I have the funds in there to cover that. How to avoid overdrafts? Always be aware of your balances. Sign up for text or email notices. This electronic day and age we live in, getting text messages, emails. I'm always getting them from my large regional bank. Be sure deposits have cleared and are available for you. Again, that fund availability. Review your statements and balance your accounts every month. And I'll say it at least one more time. Make sure we have more coming into our accounts than what's going out. And if we don't, let's do something about it so we do have that. Where can we cut back? Where can we swap out to make sure we have more coming in than what's going out? So we don't have to worry about that. All right, overdraft protection. I think a lot of us are aware of this. There is overdraft protection. What does it mean to opt in? At one time, and I think they made this change back in 2013. Somewhere 2012, 2013, they made this change. But at one time before that, banks could, you opened up an account with a bank or a credit union, a financial institution, and they could automatically opt you in to overdraft protection. A lot of times they didn't even have to tell you about it. They almost made it sound like it was part of the service. You're getting overdraft protection with this. Not telling you that you're getting charged for it. And that's why they would automatically opt people in, and you had to be aware of that and opt out of it, in order not to have to pay that fee to cover you. Now, again, if I am living paycheck to paycheck, dollar to dollar, it may be something good to have to protect me when I do overdraft. But now, after 2013, they made that change. And now that you have to opt in. They can't opt you in automatically anymore. You have to opt in. But at least with the experience that I had with my large regional bank, they'll do whatever they can to get you to take the overdraft protection. I opened a new account, or I made some changes with my account. I sat down with a financial person at my large regional bank, and 3, 4, 5, 6 times he tried talking me into overdraft protection and why it was good to have it. When he first mentioned, and I said, "Well, is it free? Is that included?" "Oh no, there's a charge." "Oh, okay. Well, if there's a charge, I don't want it. I don't need it." And like I said, 3, 4, 5, 6 times he tried to talk but how important this was and protect yourself in case you over it with your checking account or your account. And I kept telling him, "I don't need it. Why? I'm going to say it one more time. I'll try not to say it anymore. Why? Because I have more money coming into my account than what's going out. I have plenty of funds in there to cover. I should never overdraft, and unless somebody hacks into my account and steals all the money out of it. But now we have to opt in. But again, for people who are living, again, paycheck to paycheck, maybe I have cut back on everything and I'm still kind of cutting into the bone. That may be a good option. With the overdraft, using other accounts to cover that. If I do have money in my savings account to cover that, they could transfer that into my checking to cover in that scenario, use those 4 $100 bills that I needed to pay. They could do a line of credit. I get like a temporary loan to cover what's not in my account until I have the funds to pay that back. And in some cases, if they are charging you an overdraft fee, if it's once in a blue moon, especially if it's once in a blue moon, I could probably call them. I'm a good customer with my institution. I don't do this for some reason. I went over. I usually don't do that. They'll probably issue you a refund or one-time refund on that. If you make mistakes, again, there's fees for overdrafts from banks and even other entities. If I'm still doing the old-fashioned check and that check bounces, as the old saying goes, I could get charged a fee from the bank. I could get charged a fee from the person I'm sending that check to. Because, they have people processing those checks, and if the check bounces and there's expenses involved there, so they may charge me as well for that overdraft, as well as my institution. Report it to the check verification service. Your account could be closed. If I do this often enough, my institution just thinks I'm more trouble than I'm worth. I could get banned. They could close my accounts. I could get banned, and then it gets reported to a entity called Check Systems, which is like the overseer of this in the industry. They're like the gatekeeper. If you've been blackballed, so to speak, from having an account, they're the ones that are kind of keeping that. And they have all the records, they have all the information. Now, I can reach out to them. For some reason, my bank closes my accounts, I can't open an account, another bank will. I can go to them and kind of look into that. I can check into that as to why, and maybe get this straightened. Maybe it's a mistake, maybe I can get it straightened out. So you can reach out to them through consumerdebit.com or 800-428-9623. You can order a copy of your consumer report once a year. Or if you're denied a checking account because of information found on your report, we could research why. We could reach out to them, ask why, look for where's the information, where's the proof. If it was a mistake, maybe we could get this straightened out.
Why would you be denied a checking account?
Well, I'm sorry, and we'll take questions after. Okay. Write that down. Write that down, and we'll talk about that afterwards once we're done with the recording. But good question. Now, if I am denying an account, there are institutions out there that will handle what they call second chance accounts. This is like, it says savings, I think probably more like a checking account that we can open with limited use, limited services. They're taking a chance. If I've been deemed, that I'm not reliable, I can't keep money in my accounts, I keep, the overdrafts, which I think kind of answers the question, but they can issue me a second chance account with limited services. Good thing with the second chance accounts is it's for a defined amount of time. It's usually not a long period of time. I'm doing what I'm supposed to be doing. They're taking a chance on me with this account with limited services. I'm doing what I'm supposed to be doing, and I can graduate back to a regular account. Now, with these second chance accounts, they may require some type of budgeting or other financial literacy classes. But that could be important, especially, again, with the budgeting that I talked about. Because, yeah, there's something there. I'm not making sure there's enough money in my account to cover these bills that need to be paid, checks that keep bouncing. So maybe I do need to take some type of budgeting class to make sure I'm going to say it one more time. What's going out of my accounts. All right, how is your money protected? FDIC and NCUA insurance. FDIC for banks, Federal Deposit Insurance Corporation, and NCUA, or National Credit Union Administration insurance for credit unions. What's kind of important here, maybe not for most of us, but your money is insured up to $250,000 per depositor at each institution. I stress per depositor, and of course each institution in some respects, because if I have a joint account with somebody, say I'm married, my wife and I have a joint account, we're both insured up to $250,000 or $500,000 total. So each depositor insured up to $200,000, and per institution. So, you know, with Natalie, with all of her money, she can open accounts at different institutions and can have up to $250,000 in each institution, and the money is insured. So, now, my personal thought is if I do have even close to that much, I'm never going to have $250,000 in my what I classify as my savings accounts. I have even close to that much. A large chunk of that is going to be sitting in some investment someplace, collecting some very good interest. All right, filing a complaint with the Pennsylvania Department of Banking and Securities. You can reach out to our toll-free number, 800-PA-BANKS, or 800-722-2657. First of all, to determine if we have jurisdiction over that financial institution. I mentioned earlier, we regulate banks, credit unions, savings banks in the Commonwealth, but we don't regulate all of them. We regulate over 200 state-chartered banks, credit unions, and savings banks. If it's an entity that we don't regulate, well, we'll make sure to point you in the right direction. But you have a question, a problem, an issue, a complaint about your local institution, and it is an institution that we regulate, reach out to us and we'll assist you. So, again, I have a complaint. Here's the deal, though. I have a complaint about my large regional bank. I just can't, I'm going to be a little silly, but I just can't call the Pennsylvania Department of Banking and Securities and say, my bank stinks, I want you to investigate it. Okay, first of all, you have to tell us why your bank stinks, and you have to give some supporting documentation as to why your bank stinks, okay? We need to have that in writing, and so that with any complaint, we need to know what the complaint is, and we need to have backing information to support that complaint. We need to have it in writing, either actually written or it could be sent via email as well. And then what we do is once we get that information, we forward that on to the institution. They have 30 days to respond to us. And if they don't respond to us in 30 days, then we're gonna do an investigation. Why didn't they get back to us? Maybe there is something hokey pokey going on here that we need to look into, because that's what we do. We police that industry. We regulate that industry. And if somebody's not doing what they're supposed to be doing, or doing what they're not supposed to be doing, we need to know about. We need to investigate it. But they get back to us within 30 days. They explain their side of it, and depending on what happens, we may get back to the customer and say, here's what they're doing, here's why they're doing it, they're allowed to do it, or we may forward that, again, depending on what we get back, we may forward that on to, say, our compliance department, our investigation department, and they'll look further into it. By the way, not to deter anybody from complaining or even asking questions about their institution, but I think I was told somewhere between 95 and 96% of complaints about financial institutions, about somebody's financial institution, are ruled in the financial institution's favor. And a lot of it has to do with those disclosures. Gee, they're not making my money available until 5 business days. Well, if you read their disclosure, they send us a copy of their disclosure. It says right in there that the funds aren't available for 5 business. And you see where I'm going with that, okay? So, but although, and also we have to remember, there's still that 5% that aren't ruled in the bank's favor. So it could be something that they shouldn't be doing that we need to look into. But yeah, a lot of that can be solved by reviewing an institution's disclosures. And if we don't like it, maybe there's nothing we can do about it except we can change institutions. Okay, well, I'm going to look around for an institution that's going to make at least half my funds available immediately, so I can at least pay some of those bills that need to get paid right, or whatever the story is. So, Dobbs trained professional staff will be happy to answer your questions. The call is free, and so are our services. And again, if it's that you reach out to us, and if it's not our question to answer, problem to solve, complaint to take care of, we'll make sure to point you in the right direction. Common complaints that I always get a laugh out of this: an overdrawn checking account. We'll have people call us and complain that they've overdrawn their checking accounts and the bank won't give them any more money. You need to have money in there to take, if you're looking at a loan, that's something else, But we've had people do that. Questions regarding Reg D. I think in this new age with electronic transfers, and rather than actual cash being transferred, more numbers, electronic numbers than actual cash, this might go by the wayside at some point. But Reg D, at least as it refers to consumers, not businesses. It's something different with businesses, but with consumers, Reg D has in regards to the number of transactions that we can do in our accounts on a monthly basis, except for our checking accounts. It doesn't affect our checking accounts. But with all other, as I classify as savings accounts, I believe we can do up to 6 transactions a month. And it has to do with banks, or maybe financial institutions or individual locations having enough money on hand to be able to handle all those transactions, maybe even having enough people to, if I'm doing a transaction every 2 hours, I have people putting a lot of time into that rather than doing other things. I don't know, but it has to do with the amount of transactions we can do, which I believe is up to 6 transactions a month with our accounts. But it's my account. I'm sorry, 6 transactions, except for your checking account. Again, checking accounts, because we don't know. One month we may, if I'm doing the old-fashioned checks, one month I may write out 3 checks, the next month I may write out 30 checks. We don't affect our checking accounts, but that's Reg D. Wire transfer mistakes, victim of scam or ID theft. If I've been scammed or I had my identity stolen, I don't know what to do. Reach out to us, and we'll assist you. We don't directly get involved. We'll be able to point you in the right direction as far as what you need to do, who you need to contact to report identity theft and to start the recovery plan. Unlicensed lending. We not only financial institutions, but we regulate, we license, register, license, regulate other entities like loan companies, check cashing companies, pawnbrokers, financial professionals, financial companies working in the Commonwealth. So with unlicensed lending, we regulate lending in the Commonwealth. And if there's somebody out there who doesn't have a license to do it, we should know about it. And usually in those cases, it's probably under the table and they're charging 150% interest on the loan that accrues every other day or something ridiculous. So unlicensed lending, and again, if there is an issue with that, or you hear about something like that, licensed lending is another one. So now for federal banks and credit unions, the ones that we don't regulate, you can file a complaint against federally chartered institutions at www.helpwithmybank.gov, and again, that's for banks and savings companies. With credit unions, www.ncua.gov. Other entities that we can file complaints with are the Consumer Financial Protection Bureau at consumerfinance.gov and the Federal Reserve Bank at www.federalreserveconsumerhelp.gov, and also the FDIC, the Federal Deposit Insurance Corporation, at www.fdic.gov. Questions, and we're going to skip right to my contact information. I make myself available, anyone who has a question, a problem, an issue, not to push things off on our in-house staff, but most of them have been doing this a lot longer than me. They field a number of questions, have a lot more information than I do, so probably best to reach out to them at 800-PA-BANKS or 800-722-2657. But again, if anybody would like to reach out to me, they could certainly do that and there's my contact information. And with that, that concludes the presentation, and I'd like to thank everybody for joining me, either in person or virtually.